So, what the heck happened to Baba last night? I think if you look across the board, over all these different US listed Chinese ADRs, it doesn't feel like a company specific event, but rather some sort of macro specific events. Because if you were to take a look at some of these more popular Chinese names, I'm just going to name a few of them. Tencent is up 2.04%, NetEase is up 3.3%, JD 3.48%, Pinduoduo 3.79%, Baba 4.54%, and some of the EV companies like even NIO is up a whooping 10.87%. And some of you might be asking, hey, what the heck happened? What is causing this sort of movement in the Chinese ADRs? Even though, yes, I think US across the board is slightly in the green, or some might say flat, but I think it's quite interesting because now, I think at least for yesterday, there's a new revelation by the Politburo. They had an internal meeting and they released their statements, and it's being second guessed, third guessed, fourth guessed by many analysts and people on the sidelines thinking, trying to guess what kind of further stimulus or what kind of further support they are pumping into the economy. And I think based on a tweet by Hao Hong, CFA, I believe some of you who are following the Chinese markets would also naturally follow him. I'm just going to name a few pointers or some of the more pertinent issues that was kind of a conclusion from the Politburo meeting yesterday. So regarding the capital markets, they actually changed their stance from steadying the market to actually promoting market activity. Regarding the property sector, there's actually no mention of housing is for living in and not speculation. So I think this area of concern has been for many investors thinking about how the property is going to implode on itself. The Chinese people are not spending any more money, and there is also this very recent term called the balance sheet recession, and it's essentially modeling after what happened to the Japan market in the 1980s, 1990s, and they're saying it's playing out in China today. So I think regarding many of such concerns, I believe there's always some element of truth, and I'm not that spectacular or that smart to really understand the intricacies of the Chinese economy because it's one of the biggest and they have 1.4 billion people. We can't really figure out what exactly is going on specifically, but which is why I haven't been advocating for people buying into Chinese indexes, but I'm picking specific companies that I presume will outperform. But anyhow, I think back to the property sector, truth be told, I believe not many people actually understand what's going on. Yes, it looks extremely bad, but I do believe that there is some sort of normalizing and there's some sort of policy actions that are going to be taking place. I'm not too sure what or not too sure how, but my focus really is on how the Chinese consumers are spending, because my biggest position is Baba, and Baba is capturing the retail spending or retail sentiments of China today. So I hope I get that out. I don't have the perfect solution as well. I don't know what is the solution, but that is not really my core concern for now. I'm not investing in the Chinese property sector or some of these property developers anyway. Moving on, I think regarding the local government debt, they also had a change in stance from strictly controlling hidden debts to optimizing debt levels. Regarding the currency, we know that the renminbi is actually also depreciating by quite a large extent across the basket of currencies. They also said that they want to steady the exchange rate at a reasonable level. And of course, to most of my fellow Chinese equity investors, this is the most important point that many of us want to take note. Regarding the Chinese stock market, they said that they wanted to promote market activities to increase the index from its current levels. Think about it. Think about what they said. Increase the index from its current levels. How much more manipulated can the Chinese stock market be? I don't know. Chairman Xi himself said that he wants to increase the index level. So who exactly is going to go against him? I'm not too sure. But I think rather than all these different conspiracy theories out there saying that, oh, the stock market is rigged, I still believe in investing in fundamentally good businesses that can continuously grow their cash flow, their earnings and stuff like that. Sure, I think in the short term, there is some sort of challenge and some sort of issues along the way. The Chinese consumers are not spending money. There's some sort of recession going on. People are not feeling optimistic. But I do believe that in the longer term, I don't see this as a very major issue, at least not in one of the major economies or one of the strongest economies out there. And of course, the last point, under the bottom line, underlying all these different factors out here, is that urgency is imminent. So I do believe that we are looking towards some sort of normalization and basically more sturdy and more solid actions coming out from the Chinese government themselves. So some of you might be asking me, hey, Chikeng, I thought these sort of commentaries about stimulus, about government supporting and the end of crackdown, I thought it has been released or many high-level government officials have been talking about it? And the answer to that is yes, there are. I think based on my last release of my video, I was talking about how I think Alibaba has bottomed the second time. And back then, I released a video on the 13th of July. And why did I release it? Actually, a very main factor is because on the 12th of July, the day before, China's Premier Li Qiang actually talked about him wanting to support the platform economies and how the regulation has kind of ended, or he actually hinted that it kind of ended. And I quote, he actually met firms such as Alibaba and Meituan and urged them to actually do more to support the economy. And more importantly, he also told them that authorities would actually seek to make regulations of platform firms more transparent and also more predictable. And that was also one of the main trigger points on why I essentially released the video and am so confident, or rather confident, on why I believe that the tech crackdown is over and Alibaba has kind of found the momentary or at least the second bottom. But many of you guys or some of the comments that I see is like, oh, why would we believe the Chinese authorities? Or why would anyone believe them, for the matter of fact? It's essentially like the boy who cried wolf. They say that, oh, we are ending, and then there's a second round. We are ending, and then there's a third round. And then trust is essentially being eroded away because nobody no longer trusts the Chinese authorities. I think that's very much a kind of Western point of view, because many of them over the years, or at least over the last 2 years, for people that have invested in many of these Chinese names, you guys essentially got burnt and scarred. That's why none of you actually believe the Chinese authorities again. But I think moving forward, or at least based on the historical perspective, it's quite interesting, because I think many investors or many fund managers or whoever actually take these data points, treat them very, very seriously. And once the Chinese government or any senior official or even Chairman Xi himself gives the green light, that is basically telling all the capital funds to come back into the stock market. And I believe that was actually what played out yesterday. So some of you might think that, hey, nobody cares about Li Qiang, or when Li Qiang talked about it 2 weeks ago, nobody essentially took notice. But I think just of yesterday, the Politburo had a meeting, which is the 7 most important people in China. When they released a statement, I think everybody actually takes notice and everybody just take reference from their perspective. So there's also a lot of talking about, oh, they vow to do this, they vow to do that, they want to stimulate, they want to ease the property sector, they want to do something about the local government debt. But that is just talking. There is not much doing. So I believe that from here on, at least from this Politburo meeting on, we hope, or at least I hope, to see that there is more concrete actions being taken to many of these underlying concerns and to alleviate the issue in totality. Second part, I think on the perspective of the market being manipulated, I would like to say that from a very bad or a very cynical perspective, you will think that, oh, the Chinese economy or the Chinese market is manipulated. But we do know that the entire Chinese economy is kind of engineered by the CCP. It's not exactly a capitalistic place. The Chinese government has very strong controls, even though it's not total control, but very strong controls. So rather than thinking of it from a very cynical point of view, I do believe that my only edge as an investor is really my time horizon, or at least my own patience. And I don't know when they will kind of iron it out, but I kind of know that it's in the national interest of the government, of the politics, to kind of ease everything out, to bring back consumption, to bring back optimism. So I really don't know what a lot of the naysayers on the side trying to decry or trying to analyze, saying that, oh, this is the demise of the Chinese economy, the Chinese population and stuff like that. So as long as you stay as a long-term optimist, I do think that there's some sort of rewards to be reaped here. I think last but not least, also when the stock market is falling, every analyst from any Tom, Dick and Harry will find all the different discussion points and issues and challenges about many of these macro conditions. Population collapse, impending war with the Taiwan Strait, the property crisis, and then the Chinese people are saving and not consuming, and blah blah blah. Like I said, I think the stock market always climbs on a wall of worries. I do believe that things will kind of normalize out in the near future. And I do hope that I can see more actions being taken by the Chinese government. And I think last but not least, I do have a friend that actually texted me, I think 2 weeks back. He was saying that he was using me as a reverse indicator. I'm not too sure whether is this real or not. He saw me release my second video on calling Alibaba bottom, and he actually sold out of his Baba position entirely just 2 weeks ago. I'm not too sure whether he has bought back in or not, but I think that in this whole perspective of trying to time in and out of the Chinese market specifically, because it's extremely volatile, I think if you compare the beta of many of these Chinese stocks compared to the US counterparts, they're probably like 1 or 2 folds higher. But That being said, I think trying to time in and out is an extremely difficult and insurmountable task, at least for me. So that's why I've always been just holding on to my guns. If I have enough cash flow, if I think that it's still significantly discounted, then yes, I'll continue adding to my position. But of course, you have to look at it on a portfolio level, whether these are suitable in your portfolio, and whether you can take on the volatility, and whether you can sleep well at night or not. I'm definitely not saying that this is the bottom, or I'm calling that, oh, my shorts are all right. I'm not saying that. I'm just saying that I do still believe that my edge in the market today is still patience, and if I can wait it out, I'll wait it out. If not, unless the fundamentals of the companies change, I technically don't buy into many of this story about, oh, China's uninvestable. I don't believe that any companies or any markets are uninvestable. You just have to look at it from a risk-reward perspective. So I hope you guys enjoyed the discussion. If you have any comments, or what do you guys think of the entire current rally? Do you think it's short-lived? And oh yeah, one last thing. I do believe that many investors are scarred. So, which was when last year, I think 2022, when I was also monitoring the market, whenever there are hints or news about this kind of end group or something about the tech crackdown ending, actually the rally is much stronger. I think it was around 8 to 10%. But this time around, you can see that the rally is much more muted. I think only 4-5%. And that was probably why I kind of guessed that, oh, many investors are kind of trying to be more conservative, and people want to see more concrete actions being taken before piling back into the stock market. So that's just my perspective. If you have a differing opinion or perspective, do feel free to share in the comment section down below as well. So with that, I'll see you in the next video, but more importantly, I'll finally see you on the moon. Goodbye!